change, the CBK...
The budget for 2024-2025 projects revenue collection at 3.3 trillion shillings. To bridge the deficit, the government plans net borrowing of 300 billion shillings and net external borrowing of 306 billion. However, the Cabinet Secretary for Treasury, Njuguna Ndongo, emphasized the importance of reducing reliance on external loans, and especially given the rising interest rates on domestic debt.
Looking at where the resources are, we are going to move to a 3.3% fiscal gap, fiscal deficit, and that is the figure we are going to live in. Compare that with last fiscal year. We were at 5.7%, about 925 billion. We cannot continue doing that. It's related to her question that the moment we have a higher deficit, we are accumulating debt.
While presenting the 2024-2025 budget to Parliament, the CS noted that numerous poor countries are facing economic instability and potential collapse due to the burden of hundreds of billions of dollars in foreign loans, much of which comes from the world's largest and most demanding government lenders.
The Kenya banking sector is exposed to dynamic global, regional, and even local developments, necessitating reforms in this respect. The following reforms are proposed. First, the Central Bank of Kenya intends to progressively increase the minimum core capital for banks from the current 1 billion to Kenya shillings 10 billion.
To further streamline the financial sector, a supervisory framework has been established aimed at eliminating money laundering, breaches of data privacy, among others.
To eliminate money laundering and vulnerability in the banking sector, the CBK has revised the anti-money laundering and combating the financing of terrorism and proliferation of financing, and a supervisory framework has been implemented so that the risk-based supervision is enacted.
Bank lending remains the most common source of external finance for many SMEs and entrepreneurs. The businesses often rely heavily on traditional debt to meet their startup, cash flow, and investment needs.
We have to get our revenues locally to finance our budget. That means that we have to do fiscal consolidation so that we stop, reckless expenditure.
However, traditional bank finance poses challenges, particularly for newer, innovative, and fast-growing companies with high-risk return profiles. Additionally, the Treasury is seeking to amend the Banking Act to remove exorbitant penalties incurred by banks.
This is intended to strengthen the resilience and increase the bank's capacity to finance large-scale projects while creating sufficient capital buffer to absorb and withstand shocks posed by continuous emerging risks associated with adoption of technology and innovation as institutions expand.
The economy will start.
Cabinet Secretary for Public Service Moses Kuria, in an exclusive interview with K24 TV, stated that the government will ensure proper allocation of funding while controlling spending.
10 trillion plus of debt that we have to deal with. So the only way is for us to ensure that if you're in a hole, you stop digging.
Given the high proportion of revenues consumed by debt servicing, it appears the government is borrowing beyond the country's means. Linda Koskei, K24 TV.